Hello, Stephen Koukoulas here, economist and a very good friend of the advisors Maxim. And here is the economic update as we really get into 2025. Now, where to start? I think the big news that we've seen already is that the Reserve Bank of Australia has started an interest rate cutting cycle. So they've already trimmed the official cash rate by 1/4 of a percentage point. And while there's a little bit of uncertainty about whether there's going to be more rate cuts through the course of this year, I think what we've seen since that announcement, that is confirmation that inflation is in the middle of the target. We've had news that wages growth is continuing to slow. And we've had news from the global economy that a lot of other central banks are still quite aggressively cutting interest rates. That if we take a step back, just monitor where the economy is now and what pressures are on the Reserve Bank, I think we can get set for a series of another 2, maybe 3 more rate cuts through 2025, particularly as the other news that's come out on the economy confirms that economic growth is still quite subdued. So in a broad sense, we've just got GDP growth sort of muddling along around about 1.2%, so not particularly strong. That's occurring partly because of the interest rate hikes previously. They've had their effect on the economy. But also that global issue, global growth is slowing. And this is something that's really important to the Hunter region too, because we've got the Trump administration also, well, what are they doing? They're imposing a range of tariffs. And at this stage, we're not sure whether Australia would be exempt, but huge implications for the steel and aluminium sectors. It could have implications on the coal sector as well. And at a time when there's sort of that, what do we call it, geopolitical uncertainty going on around the world, what's happening with trade wars and tariff wars, and let alone what's happening with Russia, Ukraine, China, Taiwan, the list is really long, that there's a lot of uncertainty. So every morning when I wake up and I check the money markets, there's often a lot of volatility. Stocks are down a lot or up a lot, and that sort of thing is feeding into the economy here in Australia. The other thing that's happening too is that the housing sector has weakened, and particularly around New South Wales in general, Sydney, and then the Hunter region, of course, which are somewhat interlinked. That incredible boom, and I think we have to say incredible boom in house prices that we've been seeing has just started to peter out. Now, I don't want anyone to be too worried. I don't think we're going to be seeing a housing crash. The interest rate cuts will certainly help that. But what we are seeing is that there has been a moderation in the immigration inflow, so that demand for housing that occurred when the borders were reopened after COVID is sort of just returning to normal. That's taking a little bit of heat out of the property market. And also the effect of extra supply. We're seeing new listings increasing. My friends at CoreLogic are showing that the listings numbers are just starting to increase. People perhaps selling their properties while the going's good, so to speak. So that puts a bit of pressure on housing. So the outlook for housing is one where the interest rate cuts will help if we get a few more of those through the course of the year. But there is still this supply and demand imbalance. So I think more than a crash or a resumption of the surge in prices as interest rates are cut, I think a pretty flat year for Sydney and the region. So I think it's just going to be one of those ones where, there'll be a few good sales. Yes, there'll be a bit of difficulty selling. And of course, if the unemployment rate continues to creep up, that has negative implications for housing because, of course, a bank won't lend you much money if you're unemployed. On that score, the labour market's still pretty tight. The unemployment rate at 4.1 is still a very good figure. It's only literally half a percentage point from being at a 50-year low. And even though it has increased in trend terms over the last 2 years, it is still at a point where there's mixed news on the availability of labour. So firms that are looking to hire talent and to retain their talent, there's sort of mixed news occurring. And one of the things about that high immigration, which I mentioned in the context of housing, has implications for labour supply. A lot of the migrants work. So they're actually adding to the supply of labour coming through too. So in a nutshell, the economy's looking okay in 2025. I think we're going to have a better year than in 2024. The rate cuts will help. We've got signs that the consumer is feeling a little more optimistic about the outlook. And when consumers are optimistic, they tend to spend. So the retail sector might do a little better. And we're also seeing, somewhat surprisingly, the housing construction side of the economy also edging up from, albeit a really low point. So a better year for the economy, broadly speaking. We do have the federal election coming up relatively soon, and I won't get into that other than to watch for the promises of extra spending from both sides, and we'll see who wins that one. At the end of the day, I don't think it's going to have a huge effect on economic conditions. But to everyone out there, all the friends of Maxim, have a great year. I look forward to chatting to you a little bit more over the course of 2025. Let's hope it's a good one for the economy.